All right. I think we should go live here in a sec. Saturday, or not Saturday, but it's summer. Make sure the stream is working really quick. Yeah, so we can go ahead and start with the screen here. Any questions or any charts that you guys are looking at, feel free to post them. How do I turn off this feedback loop? This is obnoxious. How do I turn off the feedback loop? I do not. There it is. Hear your voice. I do not want to hear your voice. I hear my voice. Okay, so yeah, let's go through current charts that we're looking at, current trades, etc. And I'm going to pull up the 50-day scan. We'll have a general idea of what parts of the market have pushed up. Most of them did not hold their 50-day high. I'm just going to point that out. Obviously, we had a pullback post data. All your charts look like every chart. Go ahead and post one. Feel free. Or two, whichever you want. As of right now, though, I posted the link in Discord. We're looking at 50-day highs with average volume over 1 million, optionable and shortable. As of right now, 98 tickers show up. And once again, most of these have not probably held their long or their 50-day high. Actually, matter of fact, we're going to specifically scan for that in a second. But as of right now, taking a general look at the different sectors that popped up on the 50-day highs, we have a surprisingly large amount of consumer cyclical names that are up. We have been monitoring consumer cyclical for the last few trading sessions, and for the first time, like I said, most of these have not held their 50-day highs, but this is a positive move in the market to finally see consumer cyclical start to hit consistent 50-day highs here. I mean, we got some complete dog shit like Rivian, and market used to love Crocs. I mean, we got Etsy out of every other social name that's up right now. Etsy is the only one that is held. If you look at XLC in particular, a bunch of the social names are down. You'd expect some sympathy off of that with Etsy, but it's not. So for whatever reason, Etsy is showing relative strength here. Starbucks. A lot of these names that we looked at over the last week here are on the 50-day highs once again. Williams-Sonoma, Yeti. Some of these we're not trading, obviously, because there's no opportunity on the chain. But let's see. We have a few consumer defensive names, which is what we would expect in a market like today. But ironically, they did not hold their highs either. Celsius, for like the 5th straight day, though, hit a 50-day high. We've seen this name multiple times. Dollar Tree. Matter of fact, let's pull the Dollar Tree. Chart up really quick. These ugly fucking lines here. So we're watching for a potential all-time high breakout in Dollar Tree, and we actually almost got it today, but we were unable to hold it. I'm going to go ahead and tag Wyatt in this. This chart is not the best looking chart in the world, but can't deny an all-time high in a consumer cyclical name if growth starts to show again. What's his fucking name in here? What is his name in Discord now? Changes it all the time. TikTok, live on TikTok and YouTube right now. TikTok, you have any questions, feel free. If I see you guys posting, I'll try to help. But just gonna go along with the ride while we look through the sector at the end of the session. Anyway, tagged Wyatt. All-time high incoming on that Dollar Tree play. That was the one he was looking at. That and Dollar General, actually. Dollar General. Dollar General is showing relative weakness against Dollar Tree, and it once again is. So Dollar Tree is the stronger of the two buys, Dollar General, Dollar Tree, but right now Dollar Tree is just not there yet. Almost had the all-time high today, but we were unable to close up and over it. So let's keep looking through the scan here. Costco, Scorpio Tankers. Look at this. This was a name that we had potentially we wanted to get long a while ago for the stream that's watching this. We've been watching Scorpios, STNG. It's an energy-related name. It's an oil tanker name. And we wanted to actually get long at this horizontal level break, but for whatever reason, the market was going crazy with a lot of different energy names. We just missed this, and it ended up being one of the biggest moves of the year in energy. So unfortunately, that was a missed opportunity, but as of right now, it's up nearly 250% year to date. So here we are again, energy, an oil tanker name, STNG. Matter of fact, 52-week high here today. Unable to hold it, but that's a key piece of information. So I'm gonna go and post this in the chat really quick. Name that we wanted a while ago before energy started breaking to the downside, but that is interesting to see that it did hit 52-week high today. It's the only technically energy related name, but I think STNG, if I'm not mistaken, is also in BOAT. It's in a few other ETFs here that have direct marine transport exposure. So Silvergate. Today. Is BTC down as well, or is this just BTC? Not necessarily down, but unfortunately the thrust move from earlier has been eroded away. Ethereum, I still think this looks like a potential bull flag breakout here on the daily, so I would consider today's pullback in a lot of these crypto-related names as normal market oscillation on the way up. Riot showing relative strength over Mara. Silvergate, obviously the big winner of those two. We have, what's MicroStrategy doing? Looks a lot like Silvergate. Alright, so today's a pullback across the board. Not necessarily worried about any of that stuff. Let's look at some financials. So we know that American Express beat and gapped up. See some follow through on other credit related stuff. Visa as well. ARC 50-day high today before a pullback. ITB 50-day high before pullback. That's home construction ETF that we were talking about. Interestingly enough, for whatever reason, ITB has bounced back. And then we got our slew of healthcare once again. A lot of healthcare related names. Not as many as the last week and a half, though. I will say that. Not as many healthcare-related names on the 50-day high as the last week and a half straight. So we've been looking at this exact same scan for 2 weeks straight. It's been dominated by biotech. Today is the first noticeable day that it's not being dominated by biotech. There's still a lot of them, but it's not number one. Some industrials popping up here. Boeing once again, 50-day high. See what XLI is doing right now. I'm assuming got caught in the pullback as well, but these are constructive price moves off of the lows, being able to hold those May lows here. Finding support right now. XLI up 7% off those lows. Technically hitting a higher high, but I don't absolutely love the oscillation here. But anybody that's been trading for longer than a week understands that the market just doesn't go parabolic. When we get pullbacks, we get oscillations. So in strong uptrends, we're still going to get pullbacks. This is not a strong uptrend yet, but it has to start somewhere. So until we start invalidating some of these moves that we've made over the last 2 weeks, I'm going to continue to treat this as a potential short-term market reversal to the upside. Appreciate it, Marcos. I feel like I have to pay you for your services. Names up here. Bumble once again, the Eric Cho Stock Dweebs special here. Bumble. Consumer discretionary. Looks like absolute shit. I'm glad we didn't take this. This looks like crap. Look at Nokia. The meme stock galore. Made a decent amount of money off Nokia at the beginning of last year. This is, let's see, potential EP, I guess. Maybe. I don't know what the options interest in volume is like nowadays. I think most of the meme stock traders have left the market. They blew their accounts and they're gone, which is fine. But, or they're just locked up in AMC, still fucking wearing their helmets and smashing their keyboards on Twitter all day that people are stupid. All right, let's move this 50-day, and let's just scan for the ones that were able to hold their 50-day highs, or at the very minimum, they're still positive on the day. Sectors, we have three consumer cyclical, ASO has been on the 50-day list forever now. So ASO, we're middle of the earnings cycle here with ASO. So something going on with Academy Sports and Outdoors for whatever reason. I'm gonna go ahead and post this. I think we looked at this and we decided that there wasn't enough opportunity on the chain. But ASO, again, 50-day high and is still positive on the day, one of the few. Let's see what else we got here. DHI, DARCH, and DR Horton, Residential Construction, and Etsy. Yeah, I'm not entirely sure why Etsy is continuing to hit here, but this is, this is something, right? We have earnings coming up July 27th. Dustin's wife just bought something off Etsy last night, so maybe this is why. But we are starting to get somewhat of a rounded bottom here on Etsy, starting to carve out a potential low. Accumulation area on Etsy. I'm surprised to see Etsy show relative strength right now. It's not, matter of fact, let's double check this. Let's use our handy dandy coin here to check ETF exposure into Etsy. Let's see if there's overlap here in SOCL. Is this technically considered a social name? It's not. Wow. Okay. What up, Silver? I'm surprised to see Etsy has zero exposure into SOCL. I am very, very surprised. So Etsy is not considered a social media related name according to the market. Let's look at Fun Style really quick and go down to sector and see what. It is a consumer discretionary name. They're calling this an internet and direct marketing retail name. So let's see if there is. It's 100% tech, consumer discretionary, zero social. That is wild to me. So, okay. I was expecting some sort of exposure to social, having some sort of impact on the snap miss, but it's not. It's just strictly an let's see if it's XRT. It is. Okay, so there's only 65,000 shares. 65,000 shares inside of XRT. So even though it is technically an XRT related name, it's probably not the best ETF to utilize. It's technically the Van Eck calls this a moat. It's pretty funny. FDN. So it's an FDN name. They own 846,000 shares of Etsy. It's an internet related name. Okay. So just we did some FDN analysis earlier today because of the Airbnb play that Dawn was talking about. Now we got another one through Etsy. So I'm gonna go ahead and post this in chat and throw a horizontal level here that makes sense. I believe we missed the original entry here on Etsy. Who knows what happens on Monday, but we missed the original breakout. Would have been nice to get a larger pullback here today, but we are finishing green, so that is positive, right? Etsy showing relative strength. I'm going to post this. I'm also going to talk about really quick consumer discretionary name. It's not SOCL. Wouldn't it be same as Shop? We can look up Shop really quick. Let's see who owns the most amount of Shop. ARK. ARK owns the most Shop shares, bud. Which I don't know why I'm surprised. ARK owns the most shares of some of the most random stuff. Not that Shop is necessarily random, but 7.7 million shares are in ARKK. JP Morgan owns 3.8 million. ARKF owns 2.4 million. Then you got EWC, which is your Canadian ETF, which owns 2.3. That's wild. I did not realize that ARK owned the majority. I knew they owned a lot, but sector-related shop is going to be considered a Amplify Online Retail. I'm actually kind of surprised it doesn't have any internet-related exposure whatsoever sector-wise. That's surprising. This is why I love this program, and this is why I'm glad that we focus on industry and sector weighting and stuff. So yeah, that's really surprising to me that Shopify has literally zero exposure within any of the major sector or ETF or industry ETFs. That's very wild to me. Anyway, okay, well now we know ARK. ARK is the major owner there of Shopify. Let's see what else is popping up on the scans really quick. We have BJ. It's not a buy right now for us, at least. Regional bank IBN. If we're looking at regional banks, we know that regional banks are showing relative strength here, but this is a thinly traded. This is a large cap. That's kind of wild to see a regional bank hold a $68.5 billion market cap. Looks like it's held its strength better than the majority of the regional banks, but still, this is not something that we would buy. For the guys in the group, feel free to post any charts or trade ideas that you guys have. We can run through them before the end of the session here. ROK. Industrial name here. Absolutely, but it looks like the same sort of play as T-Doc. Down today along with everything else. Let's see what else. Here is a, off the images, looks like a bull pennant. A little bit of a flag here on PAOW, or PAYO rather. Horizontal overhead resistance area with a few days of higher lows. This is an ugly fucking chart. I'm not going to trade this. But there is a little bit of a high and tight going on right now with PAYO, Payoneer Global. It's a just underneath the mid cap at 1.89 billion with an ADR of 7.5. So this thing has the capacity here to move off of this horizontal level break. You can reasonably see $6-7 in a day or two if it does break, but this is something that I'm not going to fucking trade. Fuck that. I don't know about the rest of you guys. Let's look really quick at heat map here. Yeah, fuck utilities. Utilities up the most supposedly. Let's see Marcos. UPS. Okay, cool. Let's pull UPS up in Quicken real quick. So this is an industrial related name within air freights and logistics. We already knew that. Just want to get the, let's see here, just because I'm looking at everything. Let's see who owns the most UPS really quick besides Vanguard. Vanguard owns the most, and then SPY, and then XLI itself. IYT is probably going to be the sector, or the industrial rather. Okay, so we have XLI as our sector for UPS, and then we have IYT as the industrial component of it. So really quick, just to paint the picture, and for people that are on stream watching what Marcos is looking at, we have XLI here on the yearly. We just talked about this. We've bounced 6.5% off of the lows. Stamped the 2020 lows, by the way, for everyone that's on stream here. We have these levels that we have across essentially every single chart. Straighten out the fucking camera. We have these levels. We want the 2020 highs clearly indicated on our charts because we've realized that a lot of the sectors are coming down, testing these 2020 highs, and then finding support there and bouncing, right? So have this drawn out there. XLI did find support. We tested it 3 or 4 different times at $85. We bounced. We're up 6.5% off of that. That itself, for me, is not a tradable event, but it is a piece of information that, hey, XLI was unable to break below those 2020 highs. And so is this a logical area for it to find support? And if it is, how can we start to attack the chart with good risk versus reward? XLI is making its first major move off of the low, up 6.5% and hitting a higher high here. Then we have IWT which is the industrial component of UPS, right? They are specifically investing in transportation style stocks. And so you have XLI bouncing hard off of the 2020 highs. And I do not have a level here for the 2020 highs in this particular ETF, but you can see we didn't even come down and test it. So this is good. We have both areas either holding or not even hitting the 2020 highs. That's something that we'd want to see. So we see zero overhead resistance that we have to worry about with these 2020 highs because IWT never hit it. Just to remain transparent here, IWT is up 8.5%. So the sector itself, XLI, is up 6.5. The more volatile industry is up 8.5. That's exactly what we would expect. And here's Marcos's chart. He has a rounded bottom with the horizontal level at 18650. MACD crossing up and over the zero. He's one of the traders within our group that uses MACD. RSI is above the 50. So yeah, this is a green lighted stock to buy. At least from a technical standpoint, we have sector and industry strength behind us. He has the technical setup that he likes, which is a rounded bottom with a horizontal level. I want to go ahead and mark my chart exactly like yours, Marcos. You have it at 18650, correct? Let's make sure. Draw this out. So we're on the same page here. Nice little rounded bottom. Bonus points for stamping out the low in May. We've seen a lot of the strongest stocks bouncing have found bottoms in May and then unable to retest it again in June. That's actually one of our requirements for going along right now. Okay, Marcos, you have a price target and a potential stop loss off this horizontal level? And I cannot hear anything coming out of Discord right now. So that sucks. I did not realize that my shit was muted. Try to speak now. Yep, can't hear anything. Might as well just type it out. Added this area. I apologize. There's always technical difficulties when I'm streaming. Either Discord goes out or some dumb shit. Okay, added the area. I see the area that you added. Yep, so there's an argument to the left-hand side. So everyone's watching the stream here. Marco says he is going to be watching this area of the chart here. We call these arguments. It's areas of consolidation. In this sense, it was a downtrend, right? So we consolidated here within this rectangle for 20 days or 13 trading sessions before dropping below. What Marcos is correctly identifying is that on this horizontal level break, it's horizontal obviously because we've tested this as resistance 3-4 times now. We finally flipped it. So his level is 18650. Today we flipped it and came back down and tested it. We like that setup within TTI. He says, listen, I like the breakout, but I'm very aware of this area of the chart. We had previous consolidation here, which means if we're trying to break above this on a horizontal level break, what's reasonable to expect? We would expect some resistance as people that bought UPS in this area became bag holders as UPS came down, and now that they are approaching their break even, they're going, oh my god, I'm never going to do this again. Please let me just sell this at break even. The trend in UPS might be shifting to the upside. That's what Marcos is saying, but we are not oblivious to previous price action, and therefore we would expect some short-term resistance as we clear this volume node. For any of you guys that are trading with VPVR, I think it's reasonable to expect, I don't have it on right now, but if it's reasonable to expect that this would be a high volume node, or at the very minimum a medium volume node, because we consolidated here for multiple days in a row, so you know that there's action there. Going off original breakout, I have 186 out of price target number 1 at 200 and the stop out at 18169. So let's pull this up really quick. I'm gonna do this the fucking basic way. So everyone that's watching on stream knows exactly what we're talking about. We use a lot of lingo and not code words. I don't know what the fucking thing is, slang. We use a lot of lingo and slang within our group because we have a lot of different things that we look at. So for example, we would call this horizontal level a RON, which is a risk on level. If we're above the RON, we'd be going long. If we're below the RON, we'd be looking to, at the very minimum, not be going long. And we also have a ROF, which is a risk off area. So his PT1 is a price target number 1. SO1 is 18169. So let's actually throw those on the chart here. Your breakout would be exactly, we'll do that, 186. You have a stop at 181. We're going to go ahead and put that at just 50 to make it nice and pretty. And your price target number 1 is going to be 200. So that is a risk. So everyone that's on stream here, let me go ahead and fucking zoom in. That is a risk to reward ratio of 3.17, which is what we like to see within TTI. We do not trade anything under 3. 3 is the minimum, right? So if we're not at the very minimum targeting a 3-to-1, we do not take the trade. This allows us many opportunities to get in, test our ideas, add into winners, etc. And if they don't win, we can actually lose more often than win and still make money. So this is a way for us to hedge against risk, hedge against poor decisions, hedge against bear market bullshit. Right? So 3-to-1. Yeah, this makes sense. I'm assuming you would attack this through the options chain. Marcos, what are you thinking? I don't have it up right now, but assuming it's going to be spreads, because if I'm not mistaken, UPS is a little bit expensive to play. I don't know what the IV is though. So we have a Marcos. Let me know what you're thinking on the options chain here. Type it out though, because I can't hear you for some reason. All right. Just so everyone's fully aware, we have a checklist, an options checklist within our group. And one of the things that we look for is IV above 50. We try to buy spreads. We don't want to fuck around with IV crush whatsoever. It's not something we want to do. Spreads aren't perfect, but spreads do hedge against IV crush, obviously, because the long call is going to get blasted as IV comes down, but that short call is going to gain on that IV crush, right? They're not a 1-to-1, it's just hedge, right? Hedges aren't meant to be 1-to-1. So we're gonna be able to lower our cost basis and lower our exposure to potential IV crush. And obviously if IV is above 50, the odds of it coming back below 50 are higher. So we don't want to do that. We want to, in a perfect world, we will be wanting to buy low IV and then have that IV expand. That causes premiums to expand. You make money that way. In a high IV environment, which is what 2022 is, we want to try to hedge against the risk of that decay, and therefore we would be looking at the spreads there. Everyone is off enjoying the weather right now. Not liking much on the chain. Is there no liquidity or is it just expensive? For those of you that are watching this, a lot of trade ideas that you're going to find trade setups that make sense. And specifically, if you're an options trader, you're just not going to be able to find the right combination of contracts that are going to make it happen. Don't try to force a trade. If there's not an adequate amount of volume and open interest, and do not get stuck buying an illiquid product. Do not do it. You will not be able to close even if you have a winning trade. The only people that can consistently move in and out of illiquid contracts and make a lot of money are liars or paid group leaders that are pumping those shitty illiquid contracts to their groups. So just do yourself a favor and avoid that stuff. We have a threshold of at least 1,000 open interest and 100 volume on the day. Sometimes we can deviate from that if it's a little off, but that generally keeps us within liquid contracts. We do not have to worry about not being able to close. So Marcos says the spreads are wide and expensive for calls. Spreads on the contracts are wide and don't want to spend $4 plus per contract. So there you go. This is a good example of a decent, actually it's a pretty good setup. We have XLI strength. We have IYT strength. So sector and industrials are matching up. We have the technical setup here. He likes the rounded bottom with the horizontal level breakout, but he is an options trader, and therefore he's now negated off that trade because there's no specific play on the chain that is available for him without him incurring risk of not being able to get out. Also at $4 per contract, sometimes it's smart not, if you don't have the adequate amount of capital, to just go and buy these huge contracts. I see people buying Tesla plays and shit when they only have $1,000 in their account. It's fucking wild. I mean, you're gonna blow your account super fast. So good eye, Marcos, and I appreciate you talking through that with me. Hopefully everybody that's listening on YouTube and TikTok learned something with that. Right now, utility is the only sector that's going to look, it looks like, unless we pop here in the last 6 minutes, utility is going to be the only sector that ends up. We have that is leading rather. We have real estate that's up 0.57, utilities up 1.17, staples up 0.43. Tesla is holding its green. We loved Tesla. We talked about this yesterday at the end of the session. We wanted to get long Tesla today, but we wanted a nastier pullback. So we are not long Tesla as a group, at least. We wanted to get a pullback off of a high volume breakout. A perfect fucking pullback would have been somewhere around the original horizontal level that we gapped through. Unfortunately, we didn't get it. So did not enter in on Tesla, but I would have loved that opportunity today. I do think that the market is turning a corner, at least for the short to midterm. So I think there's more reward there for the bulls than bears at current price. Biotech getting slapped. It's a very volatile area of the market. I am personally long. Biotech ETF. Communications got killed today because of the Snap earnings. Snap is going to close sub $10. That is incredible. This was a $70 or $80 stock a year ago, right? Yep. Less than a year ago, this was an $80 stock, and it is now sub $10. It's down 88%. I wish I could say I'm surprised. Fortunately, I did not hold my short long enough. Matter of fact, I think I got bopped out of my Snap short at a loss. Like the one asshole in the world that somehow lost money shorting Snapchat this year. Check out crude. Crude is officially going to be closing below the 95 threshold that we've had. By the way, for anybody that's watching this stream, Mike, who's not joining us for Power Hour because most people are taking the end of the session off. It's nice out, summertime, I get it. Unfortunately, I'm in Brazil. It's fucking wintertime, so. We had this trend line here that came back down from January. It started. Mike pointed this out. We broke below it. Mike was actually the first guy to say, hey, if we stay below this, you know, this is a change of attitude. We had our first lower high. We were talking about the possibility of crude potentially breaking down. At the time, it was really hard to short energy after the massive run up. But this is in, you know, from a classical technical analysis stance, this is a first lower high in a larger move, and therefore this was a yellow light to continue to go long. Is this a buy the dip sort of scenario? It wasn't for us. RSI was below the 50. We had our first lower high, and Mike said if we break this trend line that's held since January, at the very minimum, it's a change of attitude when it comes to crude. And lo and behold, we started to go short energy. It's not been the easiest short because it's been incredibly volatile, but it looks like crude is going to be closing below 95. And RSI has been pinned below the 50 the entire time. That was the right call, Mike. So if you're watching this later, congrats. What I will say, though, is buying dips like this is incredibly risky when all the momentum indicators are showing you that there is a potential for continued downward movement. And just so everyone's fully aware, if you see crude coming down, right? Crude and XLE. Crude is ticker CL1 exclamation point in TradingView. XLE is your energy sector overall. They are highly correlated. All right, so I'll prove it to you really quick. The market's about to close. I have XLE up, and I'm now running a correlation coefficient across crude. The closer to 1, the more correlated. The closer to -1, the more inversely correlated. And this, to me, screams heavily correlated. On the weekly, so this data actually matters, if crude is breaking to the downside, historically speaking, energy is not far behind, right? So crude generally leads the energy sector in terms of price action. If crude is breaking, check this out, for everyone that's still watching this stream, there's a little bit of alpha going into next week. If crude is breaking a horizontal level that matters, which if you like technical analysis and support and resistance, this level matters. We've tested it multiple times. It's reasonable to expect XLE is going to be joining crude here in a few trading sessions, breaking down below. So something to consider there for anybody hunting for last minute plays. This is not financial advice, but energy is showing relative weakness. Crude is showing absolute weakness. All right. So looks like we have 2 minutes. Any questions, feel free, guys. Charts, etc. It's been a fun week. Hanno, I appreciate you showing up every day. For anybody that's listening, that's in the group, listening to the stream later, Hanno made some incredible decisions this week. AMD play he played to the long side, it was good. A few other trades that he traded this week that were good. It's incredible to see a 19-year-old with this sort of maturity. So congrats, Hanno. Lucid. I know that you're in the Lucid play right now, and this is one of the fun ones, right? What do you do here? Do you cut it? Do you let it run? Lucid meme stock galore. Get XLY really quick. I'm gonna go ahead and post this. XLY potential double top. I guarantee you, Sunday's strategy session, we're gonna be talking about: is this a potential double top in XLY? Have we peaked at the same area we peaked last time? Are things different? I'm gonna tell you right now, yeah, I think things are a little different. RSI was at 50 the last time, and now we're breaking back to the downside off of 70. To me, this is a bullish momentum regime, and I expect XLY to continue on up into next week. Yeah, I expect Lucid was probably a hold as well. Anyway, guys, looks like the market's wrapping up. Thank you for joining. Hey, you guys should fucking follow me and like leave fucking comments on my videos and talk shit if you want to. I'll reply to them. All right. Enjoy your weekend. Let me end this fucking stream.